as I told you about step 3, so calculation of, that is nothing but the final step, calculation of your operating inflow of cash or outflow of cash. That is continuation of your step 2. Your step 2, that is we got operating profit. It's a continuation, full-fledged thing. Step 1, step 2, step 3 will come in one format only. Operating profit before working capital changes. Before working capital changes. Now, when I talk about working capital, so in working capital, operating profit before working capital changes. When I talk about working capital talks about current assets and current liabilities. So here we are going to add increase in current liabilities, and decrease in current liabilities. Decrease in current assets. Decrease in current assets. Now, increase in current liabilities results in inflow, but in current liabilities you need to be careful. That is provision for your tax. We are going to exclude in current liabilities. Then we are going to exclude bank overdraft in case of current liabilities. And in case of current assets, we are going to exclude cash and cash equivalents, your current investments, marketable securities, and short-term investments. That is going to be excluded from current assets. Then we are going to deduct decrease in current liabilities and increase in current assets. Now, why are we doing this? This is increase in current liabilities is assumed that we are borrowing funds, there is inflow of cash. And when we are having decrease in assets, we are selling the assets, we are getting the money or converting that current assets into cash and cash equity. Decrease in current liabilities means you are paying some cash, outflow of cash. Increase in current assets is explaining, or it is telling that we are investing money on assets, so outflow of cash. So we are going to add and then deduct this amount. Whatever balance which we get, that is, it is continuation, that is as per step 2, whatever amount we got, step 1 is added with step 2, we got this value. Step 2 added and deducted with this value, we are getting step 3. Now, we are going to add certain items like income tax refund to this. Then we are going to add your claims from insurance companies. What we have deducted in step 1, and then whatever balance which we get, from that we subtract tax paid or provision for tax of previous year. We deduct whatever balance which we get, that is considered to be your cash flow or used in. If you subtract, after subtracting your tax paid or provision for tax, you get negative balance, that is called as cash used in operating activity. And when I talk about positive figure after deducting, it is cash flow from operating activity. Is it clear? So I hope it is fruitful for you during the exam. I have explained in the 3-step formula as such. Thank you so much.